Good morning. Welcome back to another market open. It is June 30th, 2023, 9:21 a.m. We've got a lot of news to cover, and it's Friday. We got through a rocky week in the markets. I believe the market's not open on Monday because of July 4th weekend. I could be wrong, though it might not be open on Tuesday and open on Monday. But we are here at the end of the week, and we got a lot of stuff to discuss. Thank you, everyone, for being here. Torben, Johnny, Ty, Gorton, Bots 101, Ray, keep walking, cool shirt, looking good. We are in a sweet spot now, execute, and we have a game changer. Be well. Let's see what we can do. Ricardo, TJ, Canman, Joseph Viegas, Jared, Power Napster. Good morning from a stupidly governed Germany. All right, you said it, not me. I don't know how Germany's doing, but you're the one who said it. Edmund Zhang, Broccoli Bob, Ahad, Nathan, Aloha, Mike D'Angelo, Pete, Matt Hernan, we are here, my guy. What's up, Benny? I knew a guy named Benny in middle school. I haven't met a single Benny since then, but I remember Benny. He was a dope guy. Felicia, Adam, Mike Oxard, David, Mike Archangelo. What's up? What's up? What's up? Thank you all for being here. I'm here for sexy hair. I appreciate that. Adam, my guy. What it does? Happy research, everyone, or happy Friday, everyone. Pound your research. What's up? Someone said something. Monday morning, Monday market open, Tuesday market close. Okay, so next week we have 1 day of suffering on Tuesday, but the rest will be fine with the market. We're headed into July, ladies. Is this the last day of June? This is the last day of June. This is June 30th. We are headed into July. So this is what we're doing. All right, so we got some headline news we got to run into. Thank you, 143 people, for being here. It is Friday. It is the morning, and we've got a lot to discuss with what's going on in the market. First off, Apple has hit 3 trillion dollars of evaluation. By the way, if you guys watch Westworld, now I realize where I got that name from. Dolores was the main character. So every time I say dollars as Dolores, I think of her now. It was a great show after season 2, they completely ruined it. But season 1 was like one of the best shows ever. Okay, so $3 trillion. It's at 192 in the pre-markets. And as a result of it being at 192 in the pre-markets, I think the whole market is rallying a little bit because obviously Apple's 7.5% of the S&P. Now to 191.91, just enough for it to hit 3 trillion. Here's the bet. Do you think when the market opens, Apple will maintain the 3 trillion dollars, or it'll get sold off? I mean, obviously it could definitely get sold. That's something that's likely to happen. Let's do a poll on that right there. This is the poll for those who are here before the market opens. So market open, Apple maintains 3 trillion or no? I think it'll maintain 3 trillion. Kate, baby, good morning. Thank you for being here. Colin T, it's going to hold. I think it's going to hold too. It's going to be very interesting to see how it happens. The 10-year popped on the GDP news. Yeah, so we also got to talk about that. So Apple's at 3 trillion. Then a report on Bloomberg came out, which is another really important piece of news on inflation, which is core PCE seems to be dropping, which is why inflation is cooling down a little bit. Let me share my screen here. And I think this is another reason why the markets are up in the pre-market. Real quick, Palantir in the pre-marks are doing well. Palantir's up at $15.43. SoFi's up at $8.96. And Robinhood is up at $10.13. Robinhood now a stock I have to check on every single day because I put some money into Robinhood. So got to see how Robinhood does. But things are up pre-market. So NASDAQ 100 futures advanced 1% after a PCE report, markets wrap. So stock traders decided to look at the glass half full on Friday after data showed signs inflation is moderating, even if that comes at the expense of economic growth. As the market continued to climb a wall of worry, major equity benchmarks advanced with the tech consolidating this year's leadership. The NASDAQ 100 is poised to notch a record first half rally after adding roughly $5 trillion in value this year. Remember, the top of the NASDAQ was 16,000. Right now, it's about 13,500. Treasury 2-year yields, which are more sensitive to imminent Federal Reserve moves, were a little changed, which is kind of good. And key measures of U.S. inflation cooled in May and consumer spending stagnated, suggesting the economy's main engine is starting to lose some momentum, especially with student loans coming back. The Personal Consumption Expenditures Price Index, one of the Fed's preferred inflation gauges, rose just 0.1% from a year ago. The measure stepped down to 3.8%, the smallest annual advance in more than 2 years. So that PCE report is really good this Friday morning, where we usually get sell-offs on the Friday, but it didn't happen. Headline inflation went down from 4.9 to 4% last quarter or last month. But the problem is there was some core elements of inflation that were sticky, like housing and I believe energy. If PCE is coming down, which is personal consumption, this is like how much people are actually willing to spend, and that measure is coming down, that means headline CPI should really start to take a hit next month. And again, if it does, this is what's going to happen. The entire freaking narrative is going to change. Jay Powell going on every little talk show he's going on, fucking going on Oprah Winfrey and shit, basically saying, oh no, 2 rate hikes. Could you imagine if they invited the federal chair of the reserve to fucking Oprah or something like that? But he's like, yeah, 2 rate hikes. It's going to happen no matter what. If inflation drops like a rock, he cannot say that. That's not going to happen. At best, we get 1 rate hike. Narratives change like that. Think of the narrative on Palantir. Within a week, done. It's the next AI play. It's not some black box company anymore. Now you got the biggest analysts in the world saying, hey, if you don't have some Palantir, I don't know what's wrong with you. It changed immediately. That's what can happen in the markets. That's the one thing I've learned over the past couple of years. It's like narratives change incredibly quickly. And when they change, you're either in or you're out. And it'll be interesting to see what happens from there. Zocold, good morning. Selling my entire not big Apple position at 192. Cause, why not? Do you mind disclosing how much Apple do you have? I had Apple at like 140 in 2022, and I sold it out a while ago. I haven't owned Apple in a very long time. Hey, look, I love Apple. Apple's a great company. I mean, it's the best, balance sheet you could argue on the planet, but it's just not as exciting for me. And I think the market's giving it a lot of momentum for growth that's likely not going to be there. I mean, look, if the Vision Pro sells like crazy and the new iPhone sell, the growth could be there, and they could just, they generate $99 billion in net income. I mean, how could you not want to be an investor in that company? But then you realize the market valuation on a company that's just going to be a little harder for it to grow over the long term. So it's harder. Theo, happy Friday. Let's effing go. Still doing Enovix Sunday Mid. I'm from the UK, so looking forward to being able to be there live for once. Yes, 11 a.m. Eastern on the new Finance Junkies channel. We will be there live talking about Enovix. That'll be a 2-hour episode. It's going to be a lot to discuss. Okay. 69% of you, of course, 69% of you said that the market will maintain 3 trillion. 31% said no. So I guess let's see if that holds up. By the way, Johnny, I just added you as a mod, so you can now send links and do all that stuff. So Johnny, you are officially a mod on the channel. You should be able to do what you need to. Amit, did you see Germany denied Palantir as even an option for any type of policing software? Yes, that is correct. I will bring that news up in a second. Germany has done a decline on Palantir being one of their softwares. Let me actually show it up real quick right before the market opens. We've got about a minute and a half. Look, I don't think this is the biggest news in the world. I mean, this is one of those things Palantir is just going to have to keep battling with. So Palantir fails nationwide adoption in Germany. The clients failed in the proposal of fear of data protection, lack of legislation, and the price, and the experts demand their own solution. So at the end of the day, my opinion, Germany historically has been very hesitant to adopt new technology products. My opinion on this is this is a part of the problem, right? You're not going to win all of them. It's part of the journey. You're not going to win all these contracts. But regardless, the goal is to just be so good that eventually they call you back. Now, do we lose the NHS contract? I think that's a lot more safer than something like police adoption in Germany. So look, it is what it is. I think we'll eventually be able to win a lot of these clients. But if the biggest thing is fear of data protection and price, then price is negotiable. Lack of legislation, that's a Germany government thing they can do. Fear of data protection, that's a marketing thing. And if Palantir can figure out the marketing thing, then, that'll be okay in the future and we'll be able to get those contracts. So it is what it is. Can't win all of them. We'll see in the future how we try to get some more of those different contracts. Okay, here we go. We've got 25 seconds till the greatest invention of wealth creation in the history of the world. If you put $1 in the S&P in 1800, it would be worth $2.3 million today. That thing's opening in 13 seconds. And by the way, we're all alive for it. I met a lady yesterday at ShopRite, which is one of my local grocery stores. She was 80 years old. We had a nice conversation for 30 minutes, and she was just happy to be alive. So hopefully that gives some perspective to everyone here. We should be happy to be alive in a pretty amazing time, I would say, in human history. 9:30 a.m., June 30th, 2023. The stock market is open. Wake your ass up. Palantir at $15.45, up 1.64%. Robinhood, $10, up 1.15%. SoFi, $8.89. Let's see if it hits $9. It hit $9 yesterday at 2.07%. And Apple is officially a $3.01 trillion company. Apple has hit $3 trillion of market capitalization. It is here, and it's not getting sold off. It looks like the market's happy. It looks like the market's been waiting on this, and it's time for the market to accept that Apple deserves to be a $3 trillion company, and that is going to be great for the S&P today, given Apple is 3.5% or 7.5%. of the entire index. Nikola is up 5.08%. Snowflake up 2.41. Palantir up 1.81. NVIDIA 415. Not bad on NVIDIA. Google at 121. McDonald's at 294. Unity at 44. Wow, Unity just continuing to do just phenomenally well. That's it. Unity is doing good, man. Unity, this is a good one for Kathy. I don't know what her average is. I think it's like in the 70s or 80s, but this is great for Unity. Zoom at $68. Roku at 64. Tesla at 260. Not bad. Tesla is now $260.97. I think there was like a cat fight between Ross Gerber and some of the other Tesla folks on Twitter Spaces yesterday. They were like, why did you even do the video with Dan O'Dowd? And he was like, I'm trying to help the community. It was just very hilarious to kind of see how it all happens. Look, when you've got trillions of dollars on the line in the case of Tesla, you're going to get these types of fights in the community. Could you imagine one day if Palantir gets to that level where we have that big of a community? That would be crazy. Enphase at $160. Amazon at $129. Wow. S&P at $441. That's that hats off to Apple. That's Apple. Wow. Could you look at that? Did we hit 443? I forgot. So last week we hit 443, but it's been gone for the past 15 days. That was on June 15th. So we're back in the 440s. 441. Oh, by the way, I reached out to Tom Lee yesterday on Twitter, who thinks like the S&P should get to 478 by the end of the year. And I asked him to come on the stream. And he said yes. So I'm DMing his people. His people are talking to my people. You know, my management and my agency that also is by the name of Amit is talking to his people and his agency. And hopefully we get him on next week. It would be really cool. I'm not, no promises, because with these things, you know, you never know what happens. But if we can get him on, that would be super dope to be able to talk to him. NASDAQ at 13,733. Open Door at $4.02. Truist at $30.72. Adobe at $484. Microsoft at $339. Now, $351 was the top on Microsoft. PayPal at $66. Square at $65. Spotify at $160. DNA Ginkgo Bioworks at $1.85. Snapchat nearing towards $12. Wow. Yeah, the market's definitely moved. Snapchat's getting to $12. And Coinbase at $74. We're about 2 weeks away from earnings seasons again. So we will be back at earnings seasons in about 2 weeks. SoFi crossing $9, and Palantir now at $15.63. Let's see if we can get 16 today on Palantir. Come on, Palantir. Let's see if we can get you back to 16. It's probably going to be a little harder, but if we get a little bit more momentum, we can blow past it. We've done it many times. 16 is pretty hard resistance for Palantir. All right, not bad. Not a bad open. Not a bad open at all. Palantir community will never be like Tesla community because they don't have a consumer product. I used to think this, and then I realized how passionate the community is and how smart our community is. So yeah, it'll never be as big, but it might still be a pretty decently sized community if Palantir gets to, you know, the price targets that we need to get it. Amid hitting on an 80-year-old. No, I was not hitting on an 80-year-old. She actually asked me this. I was with this lady at ShopRite yesterday, and she was like, hey, can you grab me the coconut water from the top? Or she was asking me like, do you know where the coconut water is? And I was like, oh yeah, it's right here. And then I gave it to her. And then she just started telling me about her life. And you know me, when I get into interview mode, bro, like, I don't know why I am the way I am, but I just started asking more questions. I was like, oh, you got like, you know, when did you blah, blah, blah. She got divorced at like 75. She had a phenomenally interesting story. And so I just started talking. The point is, she said she was happy to be alive. She was happy to even be walking in the store, given all the surgeries and stuff she's been through. And I was like, damn, like, what the fuck am I complaining for ever? Like, this is a 79-year-old woman who's happy to be alive. You know, that's all we can ask for. All right. Mohammed El-Iran, we haven't heard from him in a while. Let's hear him give a bull case for the U.S. economy.
Alpha Investor Survey, which consists of the nation's leading institutional investors, top strategists, and our own CNBC contributors, we asked for thoughts on whether the Fed should hike rates. 74% of the participants said they should pause. The rest think they should hike. Nobody thinks it's time to cut rates. For his thoughts on this and the markets, let's bring in Mohammed El-Arian, Chief Economic Advisor at Allianz and President at Queen's College at Cambridge University. Mohammed, great to see you. Where did you fall in that survey?
So I think if they are serious about the 2% inflation target, then they should hike. In fact, Chair Powell told us yesterday that a majority of the FOMC expects to at least, he used the word at least, 2 more hikes. So if they are serious about 2%, they should hike.
Do you think that they will have to give up 2% in some way, or acknowledge that going towards 2% or touching 2% is sufficient? I mean, it seems like, you know, everybody talks about Jackson Hole, but Jackson Hole might be sort of a good time to sort of elaborate on that and expound their views.
So Sarah Eisen asked that question at Centra, and all 3 central bank governors, other than Bank of Japan, so ECB, Fed, and Bank of England made it very clear they don't want to even talk about it. The problem, Melissa, and we see it in the data on a weekly basis, is that because the Fed was late, inflation has gotten embedded in the service sector. And to get to inflation in the service sector via interest rate, you undermine the goods sector. So that is the trade-off they need to make. They want to maintain optionality right now. That's why they paused at the last meeting. But let's hope that's not the muddled middle, because getting to service inflation is tricky. We saw this again in Europe today. Headline came down, but core went up. And that we are seeing as a repeated message in most of the advanced world.
And I think that's also, his point is correct for why they paused, right? Because if you got some levers going up, some levers going down, and the ones going up are a little bit more important on the scale of magnitude than the ones going down, then you need optionality. You need the flexibility to basically decide what you want to do in the future. I just think things are starting to all come down as we're seeing in a lot of the data. So maybe we get one more hike, but I just don't think in July, if we have a 3.2% read on inflation with PCE coming down, the Fed can justify it.
Right. And then we have the sticky point of China not doing as well as some people might want, and some questions about whether Beijing will actually embark on a huge stimulus. And I ask this in the context of it being a major trading partner of Europe. And if China doesn't come out of its funk, that could really impact the odds of a recession in Europe and maybe even here too. What are your thoughts there?
It could, and I think China's 5% inflation growth target is optimistic. But having said that, it is incredibly impressive how resilient the U.S. economy is. 2% growth in the first quarter. We're tracking this for the second quarter. And it's incredible how resilient most of the U.S. stock markets have been. You mentioned the 30% gain in the NASDAQ, 14.5% gain in the S&P, despite 2-year rates being 50 basis points higher this year, despite the curve inverting to minus 100 basis points for 2s10s. So, we have a resilient economy and we have a resilient market, despite everything that's been happening around it.
And that's very true. We have a resilient market despite everything that has been going on. I want to watch one more clip and then we'll get back into some of the charts. We're only going to watch like a couple minutes of this. Areas of the market outside of tech that have much better value. This is interesting because tech has gotten frothy in terms of its valuations, but a lot of people are still arguing that Q2 might not be the worst for tech. So if there's areas of market outside of tech with a much better value, it'd be interesting to see which ones.
Joining us now with what she is watching heading into the second half, Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Steph, great to see you.
Good to see you, Melissa.
I think the big question for investors is, do you stick with what's working? Because what's working has had performances that just are gobsmacking. I mean, if you think about, a Meta or a Tesla, up, what is it, more than double basically so far this year, and then all the rest of the Magnificent Seven up between 30 and 50%. I mean, how can you keep going with this? Does it get concerning at some point?
Well, I think what's been encouraging over the last couple
By the way, Bitcoin just dropped 600 points, just dropped 1% right now.
of weeks is we've actually seen a little bit of a broadening out, so that it's not just the technology sector and the big 7 or 10 that have led us so far this year, but you are starting to see interest in energy, in financials. Industrials have held in remarkably well. We know the whole onshoring theme. And so I think there are other places to focus on, because I think that's where there's better value. But I don't want to give up entirely on tech. The total addressable markets are just so enormous, and the growth is really just impressive. So I think you want to have a little bit more of a balance, though, into the second half of the year. And I would also add, not only in the sectors I just mentioned, but I do think the consumer has held up remarkably well. And I think you want to own discretionary there. I think you want to own housing there. And then I'm more confident now, after Nike's earnings yesterday, that the China reopening play is alive and well.
You mentioned housing, which is interesting because a lot of these names are at or close to 52-week highs, even when mortgage rates just hit 7% in yesterday's session. Is the supply demand, in lack of inventory issue enough to hold these stocks up?
Yeah, I mean, I think that that's not exactly where your value is in terms of the pure play housing, but look at something like Lowe's or look at something like Home Depot. Home Depot is only up 1% on the year, and they just reiterated their guidance. So I think you can find other places within housing. In addition, you can look at a TJX. They have Home Goods, Home Sense. That stock is also flat on the year. So there are places within housing that I think you can pick at for sure. And then on weakness in some of the home builders, that's when you want to take a look. But we're 5 million homes short in the country. You have 5 million millennials that are just entering into the buying spree for the first time, right? And we've had 13 years of underproduction from the home builders themselves. So I still think that the housing market is a theme to play. Just want to be careful in terms of which names you're buying.
Okay. Housing also, this is something that's very controversial. A lot of people say there's not enough supply. A lot of people say there's too much supply. Even with interest rates, people are still buying at 7% financing, but then some people are saying it's not. So I think as interest rates come down, hopefully when we get a cut, we're going to see a lot of momentum in housing because we haven't seen this crazy real estate crash. But things could go sideways if there's not enough supply to fill that demand and interest rates stay high for a while. Now, Bitcoin has absolutely crapped the bed. I don't know what happened this morning. Look at that. Wow, we're at 29K. This was at 31,000 at what time of this morning? At 6 a.m. 31,000 at 6 a.m. It is 9:42 and it just went down to 29,979 now at 30,000. I don't know what caused this drop. I have zero idea what caused it, but look at that candle. Goodness gracious. So Bitcoin's down. And again, this is the type of volatility I can't stomach. Bitcoin might very well be like worth 60 grand or something in the next couple of years. It might happen. I just can't handle the volatility in the short term, bro. I'm too much of a chicken for it. I can't do it. So yeah, I guess we'll see what happens. But if you're holding Bitcoin, hopefully you have some decent averages. You load it up in the 15, 17K range. And now it's at 30K. We got SoFi at 892, GameStop at 25. Now, the interesting thing about GameStop, I know you guys have probably seen the Dumb Money trailer. I kind of want to set up a group if people are in New York and everyone watches the movie together. That would be so cool if there's a group of us that could just go watch the movie, because that's a movie a stock market junkie has to watch. You have to watch that movie. It's basically the whole GameStop situation. And even though I know that situation, I know the story down to a T, just because I remember living it in that time. I watched some documentaries on it. It's still going to be a fun movie to watch. That might bring some positive momentum to stocks like GameStop and Robinhood. Because honestly, at the end of the day, if the whole movie is oriented around these stocks, right, and AMC, people might say, why not? Why not try to give it another shot, or why not see what we can do? Now, obviously, those companies are not shorted as much as they were back then. But I think there's definitely going to be a little bit of a boost, especially if the movie does really well. It'll be the best marketing for some of these companies, which is probably why GameStop, AMC, and Robinhood, even though they might have a negative brand perception of taking away the buy button or sell button or all that stuff, they probably want the movie to go out just in terms of the free marketing they would get. Palantir at $15.55, Google at $121, NVIDIA at $14, holding up very nicely today, Unity at $44. Space, Virgin Galactic announced that they will charge $450,000 to go into space. I don't know who's paying that, but if you have 450 grand, I guess that's an option. I wouldn't do it, especially with the Titanic shit happening. I'm not going into space. Don't want to do it. Sorry. Not that excited to see the Earth. There's this website called Google Earth. You want to see outer space? Google.earth.com. They made that shit 10 years ago. Very easy to see outer space. 450 grand. Get the fuck out of here. 450 grand. You could go to Google Earth. Not that complicated. Palantir is not anywhere as nearly as volatile as Bitcoin. Yes, that is true. It is not. It is not. What strike did you go with for HUD? So I did option spreads. I did not do leaps. So I have the this $12, $17 strikes, and then the $15, $20 strikes. And so obviously the spreads just gave a little bit less premium and it capped my profits, but it was very cheap the day that it came down. So yeah, those are the ones that I went through. So if it can get to around $17 or $20 by the end of the year, then Robinhood's going to do pretty well. And even if it doesn't, even if it just goes up a couple of dollars, because I got the options so cheap, they can return really nice. I was up 1,700 on Robinhood 2 days ago when Robinhood went to $10.40, right? It's that's what I've learned is the beauty of options. If you can time it correctly, which is very hard to do, find an undervalued company, get your shit in before it has momentum to take off, you can do really, really well, right? And I think there's 3 companies where I have options on, SoFi, Truist, and Robinhood, that are going to do really well in the next year. And when they hit like, I think my portfolio will just be at a sizable place where I'm going to have some real money to work with. And so it's just going to be a question of if they're able to do it. Now, if Jerome doesn't cut these damn rates, it might not happen. But if he does, it'd be really nice. So we'll see. A Mick can't handle being 2% down a day. No, it's different. Bitcoin's 2% down is a lot more intense than a regular stock's 2% down. So it's and a lot of times I don't know why it's 2% down. It's 2% down because it's 2% down. And I'm just like, well, at least I understand if Palantir's down. I understand if Tesla's down, but it's just, it's just ideological. Obviously, it's psychologically, it's hard to deal with. Dude, sometimes your logic on money spending makes no sense. If you can afford that kind of money, you can make that kind of spend. No, I get it. Obviously, if you're rich, you can pay $450,000 for it. I'm just the type of guy that would never buy like a $75,000 Rolex, right? I'm the type of guy, and maybe this will change if I ever get wealthy in the future, but like, I'm not the type of guy that can justify that much money on something like that. I personally can't. I'm not saying it's bad if you can. I personally can't. Like that $450,000, I would want to do so many more things with that. Versus the way it goes from there. So Bitcoin only 0.63 down. Amit, what do you plan to do with the money after the options? Put them into dividends. That's it. There's two, either real estate or dividends. If these hit, I will have a lot of money. And so, because I bet a lot of money on the options, right? So they will do well. They will return decently. And so either real estate or dividends, most likely dividends, because I don't have a dividend portfolio. And I think I would be 27 years old by the time these things hit January 2025 or December 2024, which means, real estate or dividends. Build up the nest egg and just let it ride from there. All right, what else do we have going on? Bitcoin at 29,000 now, down 1.8%. Robinhood at 991. Apple went. Look at Apple continuing 3.02 trillion. Man, this is insane. Apple just said, "Screw you, we're doing it." It was, what's the chart on Apple? 6 months ago, this bad boy was at 140, 150. So let's do some math. If we go 192 minus 144 divided by 144, that is a 33% gain in Apple stock price. And again, remember, I told you guys I have a friend who has a lot of money managed in JP Morgan, and his wealth manager at 180 told him he's selling a decent amount of his Apple just to trim some off the top because he thinks it's a market top. That guy was fucking wrong. And I remember my guy called me that morning and he was like, yo, this is what my guy is saying. And I'm like, are you going to let him sell your Apple? And he's like, yeah, I'm going to let him sell my Apple. I think we're at a top. That guy sold his Apple too early, maybe. If Apple goes to 200, then it was definitely too early. If Apple retraces to 185, then it was fine. But that's the hard thing when it comes. Now, no one ever went broke taking profits, right? So there's no problem with that. It's just even these money managers that are like, oh, it's definitely a top at 181. They don't know what the fuck they're doing either, bro. Because obviously it's not if Apple's at 192. You missed out on $10 of profit. Palantir now at $15.68, up 3% on the day as well. Apple will hit 210 in July. Apple's going up forever. To be honest, I can't disagree with you. Really not continuing with growth stocks. I feel like with that money, I need to be responsible, bro. If I got my money on volatile options on growth stocks, I feel like it's only right that I put them into something that's reasonable versus continuing to be super speculative. So, I mean, I don't know. I also think by 2025, valuations will get wild if we get a bull market, and maybe it probably won't be the best idea to dump it all into growth stocks. So yeah, I mean, the goal is to start getting paid passively and see, if I can get $1,000 a month passively, which is really hard to do on dividends. You have to have a lot of money in them. Then that'd be awesome. That'll be a nest egg for the future. So I guess we'll see, if Palantir is still cheap in 2025, you never know. You never know. Okay. Let's take a look at this. I want to see one more thing here, and then we'll keep going from there. So we heard the bear case on tech not continuing its rally. Let's hear the bull case for a little bit on tech continuing to dominate in the second half of the year.
Just to our talk of the tape, final stretch of the first half, whether it is time for more offense in your portfolio in tech or elsewhere. Let's ask Brent Talkington here with me at Post 9. It's good to see you.
You too.
So what's the story going to be for the second half? We've got a couple days left in the first. Let's game it out.
I think there's going to be two parts to the second half. I think, first of all, we're definitely seeing a catch-up trade in the cyclicals that had been ignored, right? We've talked about cruise lines, home builders. They've done really well. Financials, small caps.
Your energy.
We'll get there, okay? But we'll get there. That's the last 6. I think that's the last 3 months of the year. And so, but financials and small cap are having a really clear catch up. And so I think as a trader, that's going to be the trade over the next few months. The reason why is we're going to continue to have inflation coming down. I think by the July CPI read, we'll have a 3.5 handle on CPI, that all of the data says we're going into recession, all of like the LEI or PPI or manufacturing, but we all know we're not, because look at cruise lines, homes, look at Vegas.
But you've been thinking that we were, right? You've been a don't fight the Fed person from the beginning. You said it a million times.
Yes, but we were not in the camp of we're going into recession. We are in the camp of there's a really wide range of outcomes in 2023. And so we thought that with the Fed doing the fastest rate hike in history, I think in history, at least going back to the 80s, that there were going to be cracks in the system. And I think as I reflect on the first 6 months, I never would have told you that tech is going to be up 35, the Qs are up 35%, but that's where we are. And so I think you're going to continue to see tech dominate because we're still all abuzz about AI.
Oh, you do. So even though you see cyclicals picking up, a little bit of the weakness that they've had, you still see tech dominating in the second half.
I think on a relative basis over the next 3 months, I think you could see those small cap financials relatively outperform, but I don't think you're going to see tech fall off a ledge. What I do think is interesting, and what you're going to have to see, especially with the AI derivatives, we'll say, outside of NVIDIA, is as Q2 earnings come out, those earnings, or even the earnings guidance, better keep up with that multiple expansion. And so to me, that's what will be interesting from not a broad tech, but individual securities. I think that's where you need to have a come to Jesus.
Well, let's see what other mega caps pull and
She's bullish. I mean, I like her attitude. She's bullish. Her arguments too make a lot of sense. Again, it depends on rate hikes and the market's still caring about AI, which I think the second they will do the rate hikes, we can't control. But if that's the case, why would tech slow down? Where else would you put your money?
NVIDIA out of their hat in terms of their guidance. And maybe that's what it's going to take to not only justify some of the moves that we've seen, to your point, the multiple expansion that we've witnessed, and the idea that it can keep going in the second half.
So take that question and kind of think about it for a second, because most of these big companies are spenders. They're spenders. They're buying the products from NVIDIA, which from my understand, that a lot of these products are 25 to 30 times more than they typically were because there's such a demand. So Microsoft has the benefit of OpenAI, and so they have that partnership, but they're all spending. And so Salesforce is spending to create an AI narrative for their clients. And so that to me is where you want to see, do these big companies come out and say, oh, well, all of a sudden, poof, our earnings have been so exponentially gone higher? And I think absolutely not. Because NVIDIA not only owns the shovels and the axes of this AI gold rush, they actually are the only hardware store in town.
Well, full disclosure, too, that's your stock, right? Yeah, you've been in it, you love it, and you think it's still...
That's why I like the Steve. I think that's his name, the CNBC host. He's like, all right, well, yeah, but you own this. This is the stock you rep. That's like me talking about Palantir. It's like, well, yeah, you own Palantir. So he's got to do the little disclosure so people know why she's so bullish. Because again, if it's at 415... and you love it, you want to go to 500 and your average is 100, well, yeah, you're going to talk nice about it.
You think it's up, what, 130% year to date? Valuation, you don't have a problem with at all?
If you ever had a problem with NVIDIA's valuation, you never would have owned the stock.
I guess that you own Tesla too. So if you ever had a problem with that one, you wouldn't own it either.
But what's interesting about Tesla is, remember, I bought it at 120. It had a 25 forward PE. So I think the entry point does matter. And I think NVIDIA...
Have you seen where that multiple is expanded to?
Right.
Since you bought it, it's unbelievable.
No, I think Tesla's expensive, right? And so, but who am I to tell the market what price they should pay for these multiples? And that's where NVIDIA, on a Ford 2024, if that guidance comes in, NVIDIA will have a 53 multiple. But I will say, I do think China is a risk. It has to be a risk over the next few years. And Jensen has talked about it just a few months ago in Taiwan, is that if the U.S. gets into a butting heads with China, that is the number 2 GDP country in the world that buys a ton of chips.
It is a good point. NVIDIA just got banned from the U.S. from selling certain chips. I believe they're allowed to sell the A100 chips, but nothing more to China, because of some of the obviously geopolitical tensions that we're having right now. So as a result of that, The China situation is very interesting. There was a good point brought up yesterday on Finance Junkies by Carlos. He said everyone's like, why are we giving $100 billion to Ukraine? Why are we just sending them all these new weapons, all this stuff? One of the reasons might be, and I don't even think this is that much tinfoil hat, the United States unequivocally expects China to invade Taiwan. If that is the case, we need practice in being able to figure out how to give as much resources, military supplies, money, etc., to a foreign country as quickly as possible and under extreme conditions. And so this Ukraine situation, maybe the CIA is like, hey, this is going to happen in 2027 with China and Taiwan. We need to be prepared on transporting all the material. So let's learn how to do it to have military readiness before it happens in China and Taiwan, which is going to be an even bigger war because China is a different monster than Russia. You never know. I mean, and obviously the other argument is like defense contractors just want to sell more helicopters and guns, so they're like, get rid of the old ones. So like we're selling the old ones and we're giving away the old ones out of good faith and then trying to sell new ones. That's probably the more likely scenario. But one could argue, yeah, if the United States is trying to get ready for China-Taiwan, which Taiwan thinks is definitely going to happen. Watch the 60 Minutes interview with the Taiwan Prime Minister. That dude is like, it's not a question of if, it's a question of when. If that's the case, you never know. The United States might be preparing for that. It might be happening. 100 billion practice pay. Yep, exactly. Shout out to Tanner, by the way. Make sure you check out his channel. I just did a podcast with him yesterday. I think it might be out either today or on Saturday. He does a lot of great fintech stuff and SoFi stuff, so please check out his channel. He's my buddy in the YouTube finance space. Enphase earnings will be terrible. After that will be a great entry point. I agree. Enphase earnings are going to suck because interest rates are not coming down, so solar refinancing is not going to be good. This is why we went from 220 lost $1,400 freaking dollars that day because I didn't sell at 240. I was up 1,400 because I thought it was going to go to 250. Okay. Like, see, I'm not perfect. I'm a dumbass just like everyone else. I was like, I thought it was going to go to 250. Where was there? All right. This was me. 421 for almost April 20th. I was like, oh, it's at 230. Bam. It's going to go to 250 because Enphase moves very in a volatile way. So I was like, oh, it's just going to go up. Like, why wouldn't it go up? And then this was me at 152 holding the bag. Like a day later, I saw a drop on earnings. And I'm like, oh, yeah, I forgot. Interest rates are high. And it's really not beneficial for people to finance solar at 7% for 30 years. No one's buying this shit. And then guidance for management is like, yeah, we might not grow this year, but when interest rates come down, we'll like grow again. And then I'm like, oh, shit, I'm going to be bag holding this for a while. So now, the counter argument to this is that it might be baked in. Bad guidance might be so baked in that if management just beats slightly, because these truly are. Enphase is worth less than Palantir right now, and Enphase is growing way more than Palantir. So one could argue that the discount that is on the stock right now is so dramatic that the bad sentiment of lack of growth might be baked in because future growth is definitely going to happen given solar penetration and where it's at in the world, that the dip might get bottomed up pretty aggressively. And that's what makes the market, because no one knows what's going to happen. There's one narrative that makes a lot of sense, and I think the bull narrative also makes a lot of sense. So I guess we'll see where it goes from there. Snowflake at 179, Palantir at 1553, Nvidia hitting 420, Google 121. Stocks are not selling off on a Friday morning. You would think they have a little bit more downside, but they're doing well about 28 minutes into the market. Nikola, I don't understand why this stock is up 10%. If anyone can educate me why it's up now, it was at 52 cents. So let's do some quick maths. 1.39 minus 52. 1.39 minus 52 divided by 52. It's up 167%. Nikola is one of the best investments you could have invested in 2023, or at least in June 2023. I mean, like, imagine you put 100 grand into Nikola at 52 cents and the shit just fucking, now you're up, you have 200 something. Like, it's insane. It's absolutely insane. And this is a little worrisome, because if this is happening, then is this just a function of the bull market, or is this a top? Like, is this like this is not the best news, I think, for a lot of people to see with what's going on. I financed solar panels at 3% a month ago. Wow, that's a good deal. Did you use Enphase? Were they Enphase solar panels, Juan? Or were they a different company? Nikola never made sense. Yeah, never made sense. That's why you DCA. Well, I agree. That's why you DCA. I mean, obviously, that's why you DCA. But it just, in terms of how earnings are going to go, I don't know if they're going to be the best or not. Will you buy Enphase after earnings? I don't know, man. We'll see. I mean, I should be buying Enphase now. I should be dabbling into it a little bit more, but I have not. When is earnings? Probably in July. Most companies are going out in July. We are buying and solidifying a foothold on the China and Russian border. It's strategic. Yeah, I agree. Look, I think it makes a lot of sense, actually. I mean, I know it's a little conspiratorial, but it does make sense for why we're doing this and what we're preparing for. China invading Taiwan is going to look like a kindergarten scruffle in Ukraine. Yeah, I agree as well. And look, I don't want that to happen, but after I watched the interview with the Taiwanese prime minister, the dude was literally like, stop saying if it's going to happen. It's going to happen. They don't think we deserve to exist. And I was just like, well, yeah, I'd rather believe you than anyone else in the media. Enphase doesn't make solar panels. I know, Johnny. They make the microinverters. I got it. Whatever. Fucking microinverters. Goodness. It would be so much better if they just make solar panels. It would make my life easier. Like, they make solar panels. Like, no, they're a microinverter company. It's like, all right, buddy. All right, man. Okay, I think that's pretty much it, guys. I think that's it. There's nothing too crazy. I'll be on. Look, if you guys want to leave, that's the end of the market open. I'll be on for questions since this is the last market open of the week. And this was supposed to be a segment a long time ago, and I just kind of forgot to make this a segment. But I think the last 5-10 minutes, we can do any random questions you have. It could be stocks related, life related, anything going into the weekend, not long weekend, but ultimately Tuesday. So those who joined, thank you so much for being here. Appreciate it. It means the absolute world to me. Have a great Friday. Hope you enjoy the weekend with your family. Go to a barbecue. Go do something fun. If in the United States, obviously, there's a lot of fireworks going on. Please be careful. I saw a video yesterday with some fireworks literally explode. Let me see if I can find the video. I got to show you guys the video. But this is the end of the market open, but I'll be here for another 10 minutes. So thank you for joining. It means the world to me, and I hope you have a great day. There was a firework yesterday that literally blew up a car. It was kind of crazy, and it was pretty intense. I want to see if I can find that video, because that shit was just insane, those fireworks. So I'm going to show that. But yeah, if you guys have any questions, you can leave those in the chat, and then we'll answer those questions. Where is this video, bro? Where is this video? Oh, here it is. I found it. Are you guys ready for this? This thing isn't crazy, bro. This thing is crazy. This thing is crazy. Any updates on Aldea? My update will be coming out July 2nd. It'll be published on WeFunder. So for those that follow WeFunder, the June update, I do a monthly update. June update will be up July 2nd or July 3rd on WeFunder. So wefunder.com/Aldea/updates. That's where you'll be able to see our updates. I don't talk about it too much publicly, but I'm pretty excited with some of the stuff we're doing, especially when it comes to growth and distribution. We figured out I would call it a little bit of a master plan over the past month after a lot of things not working. And I think this is going to be the one that fucking works. That's why I've been sleeping so late. I've been up with meetings at 12:30, 1:30, 2:30. On fucking Friday, I was at a meeting at 4:30 a.m., even though I was in the hospital. And some of these meetings I think are resulting in some decent progress that we're going to see. So it'll be cool. What's the MAU growth for Aldea? It's bad. It's not good. I mean, I think I've been very transparent about this. We've been really struggling with growth. So monthly active users, again, we were growing 20% month over month from January to September, from September to January. And then everything fell off a cliff as we lost our traffic. So the past 7 months has been kind of the territory of death that startups are in, which is can you figure out how to go from 0 to 1 again? 0 to 1 moments are build the product, that's 0 to 1. 0 to 1 moments are raise the money, that's 0 to 1. And then the final 0 to 1 you really need to do is figure out how to grow it. And we were there for a good 7 months, and then it collapses. And so, I don't want to say it's normal, but a lot of startups kind of go through this where they have momentum and then it dies, and then you're left with enough money to have runway, which I'm incredibly grateful for. But now you need to figure out the next stage, which is growth. And that's one of those things that's been the most, I've been through hell and back trying to figure that out over the next, I don't talk about it publicly, but the 10 hours of my day that are not YouTube, it's been tough. So I think we'll figure it out. I'm still very bullish. I mean, Spotify has not solved the problem. A lot of these audio companies, Stitcher, there's another audio app that shut down. I'm every audio app is shutting down because they don't know how to fucking solve discovery. And I understand why. And it might sound crazy for me to say I'm going to beat a lot of those companies, but I still believe I'm going to beat a lot of those companies because all we need is distribution and then we win. Especially because a lot of my thesis is based around content discovery and where content discovery is going over the next 10 years. So we'll see what happens. One word amid porn. Yeah, audio erotica is actually very, very, very in demand from what I've seen in the audio market as well. So that is very true. Gonna sell puts for Enphase earnings amid? No, probably not. Probably not. I also don't even have that much more capital, so probably not. I'm running a little low on the capital side. Okay, let me show you guys this video, and then I'll go back to questions because I was supposed to show you this video. So let me show this video right here. All right, be prepared for this, bro. This is pretty intense. Here we go. Okay, so that was bad, right? But that's only halfway through the video.
Who did that? You gotta put it in the shoe.
Bro, a whole car exploded. Like, how are you playing with fireworks underneath a 1-ton gasoline vehicle? And you're like, oh, let's explode it here. Like, that's, and then what type of fireworks did you buy that shouldn't just go straight up and like have a little sparkle? This shit's splattering across the house. I was dying when I saw this vid. I was just like, what? There's little babies there as well. I was like, oh my goodness. You want to see the link to this vid? All right, I'm putting it on in the chat. It was on Twitter. I was just like, what? What? That was insane. That was absolutely with a baby just watching, right? Yeah. I was like, what is going on here? What is going on? I didn't need a GoFundMe for personal stock buying. No, I've just, whatever money I've saved up or I've made or, whatever YouTube money, that's what goes into the market. So people are like, how do you have money for the market? It's literally just that. Like that's the money I have. And so, that's how we get into the market. That's where the money comes from. And it's not a ton, but it's, it's whatever I can do. How can we support Aldea? Sign up, aldea.io/register. Use the product, download the app. Let me know what you think of it. Again, look, the bull case, again, for Aldea, it's very simple. Content discovery, content creation is exploding. There's a lack of discovery around content, in particular when it comes to audio. For a lot of you guys might not listen to podcasts religiously, but the audio market is absolutely explosive. $33 billion a year are spent on audio advertising. So the question simply becomes, can you cultivate a network where hundreds of millions of people that already create a lot of video content could find the same level of distribution for their audio content, which is basically what TikTok did for video. People were already making video. TikTok was like, hey, do it in this format. And then you have an engine of massive discovery because you've got this platform that's shooting out videos to anyone who wants to see them. I don't believe that's happening in audio. And I've done, the amount of, I've gotten to the point where I've literally consulted experts who are running investment funds that have not invested in Spotify. And I literally got on phone calls with them saying, like, why aren't you investing in Spotify? And their number one argument was that they can't do content discovery, which is why they're buying all the, like, they just gave Trevor Noah no one wants to fucking listen to Trevor Noah, bro. And like, that's the problem with Spotify. They're listening to like all this dumb shit, or they're giving all these people Meghan Markle. Like, no one cares about her. People care about user generated content. But you don't have a platform that's curating that. And I don't think Spotify is going to be able to solve that, especially because the record labels take 65 cents out of every dollar that Spotify makes when it comes to music. And so for everyone buying Spotify stock, I'm just like, are you insane, bro? Like, you want to live on a company that has record labels taking 65% of every dollar. And that's not going to change even if they raise the prices. So you're left with 35 cents to play with. 10 cents of those goes to sales and marketing, R&D, all this stuff. Then all these new users they're adding, they want to be like 500 million users. These users are from Africa, Asia, and India that are paying less than $1 for Spotify Premium. It's just like the entire business model to me makes no sense. It's a blitz scale on music. It's an app that is controlled by the record labels, and it's not a genuine audio network with audio discovery. So my goal is to try to solve that. And if we can solve that, then I think that'd be pretty big. Did Gary Vee's people end up making contact with you? Nope. Gary did not end up making contact with us. I mean, we emailed him a decent amount of times, but I think for someone like Gary, we kind of just have to keep growing, and eventually he'll find out about us. To me, I'm not even concerned about the celebrities anymore. We have a pretty different strategy right now that I think will help us with growth, and I think that will lead to a network effect that'll get the big guys interested. So, we don't have to worry about them calling. We'll see what we can do. Is Aldea hiring marketing people, business analysts, data scientists? I think they could help find solutions for growth. The thing about startups is when you're the CEO and the founder and you're at this stage where you don't have millions of dollars, you kind of got to figure it out yourself. And to give us a little bit of credit, we have figured out a lot of shit ourselves, like a lot of shit. I mean, even getting the product out there, raising money, developing the product to be way better has all been me and my co-founder. So growth is just one of those things you can't hire for this, right? Like, I see a lot of startups try to hire growth specialists. All of them fail. I mean, I've researched a lot of these guys. Like, you can't outdo the thing that the CEO has to. You've got to do the cold calls as the CEO, and you've got to figure it out. So it's just what we got to do. And the good thing is I'm blessed to have the time to be able to figure out because we raised the money. But, you still got to do what you got to do. Earnings announcement for Enphase, July 25th, 2023. Look, we've got Vitaly in the chat. We've got Vitaly. He heard Enphase and like a little hawk, he came to the stream because he realized that that people are talking about his investment. I went to Vitaly's house last week, and he showed me his Enphase portfolio. Real talk, I'm not lying. He showed me his Enphase portfolio. And there were 17 million shares of Enphase in that portfolio. I looked at that man and I said, will you adopt me? Because I want to be underneath you. I want to learn from you. I want to learn from this guy. No, I'm just kidding. He didn't actually show me his portfolio. In fact, I even asked Vitaly. We were at Cheesecake Factory. I was like, "Oh, what portfolio do you?" I was just curious. What portfolio do you use? I mean, what brokerage, right? Because I use Robinhood. So I was just like, "Oh, what brokerage?" He was like, "I'm not telling you what brokerage I use." I was like, "You really would tell? You think I'm trying to fucking steal your?" He was just like, "Nope, I'm not telling you what brokerage." And that's the sign of a very rich man, who's not Fidelity, fucking Charles Schwab. Nope, I don't even know. So now, if I wanted to take his Enphase shares, I don't even know. I don't even know where they are. Yo, is the decision out? Oh, 20 minutes. All right, Tanner, are student loans actually out in 20 minutes? Because if they're out, I want to react to it live. Tanner, you want to join? You want to talk for 20 minutes and wait till student loans come out? Yo, that's a big deal. I forgot student loans are coming out today. I mean, I remembered yesterday, but then I forgot that it's actually coming out. If you want to join, Tanner, let me know. And we can talk for 20 minutes and we can live react to student loans. That would be really interesting. Amit, is Aldia your business? Aldia is my startup. Yes, it is my business. It is a non-revenue generating company, so it does not pay my bills, but it is my startup. It is my $1 billion master plan to take over the world. I can be on in 10. Okay, ladies and gentlemen, the show goes on. The market open continues into student loans. Let's go. I mean, this is going to be a big decision, and if SoFi prints on this decision, then I want to see it happen in real time. All right, Tanner, I sent you the link. Tell them how you are bullish on Meta after using Oculus. Yo, Vitaly, you sent me the video, right? I'm gonna play the video live. Yeah, so you guys get to see this is exclusive content. No one has seen this content before. But I played on Vitaly's Meta Quest on oh yeah, I found the video. I'm downloading it right now. At his house, and oh my goodness, I was like legitimately like in a different world. Like I put on the Oculus and I was on a beach. And I was like, what the heck is going on? This is just incredible. This is absolutely amazing. And so as soon as I saw that, I haven't bought it yet, but I was like, why do I not own this for $300? That's not the craziest investment. $300 is like not that bad. Actually, let's go on Amazon right now. How much is a Meta Quest? Let's go to Amazon right now. How much is a Meta Quest? And if I can get a used one too, it won't even be that bad. So Meta Quest 2. Right now, it's $299. Oh, a brand new one is $299. That's not bad, bro. $300 for a brand new one. That's real. What? 10,000 bought in the last month. Wow. 10,000. That's not bad. This one's used at $260, $269. That's not bad, bro. That's cheap. And then I'm like, and it wasn't even that bad, like in terms of like the way it felt. So then you took a Vision Pro's 3,500 versus. So here's my thing. If the Vision Pro is the iPhone and everything else is Android, I understand the premium. I don't think Vision Pro is iPhone. Not with that little dongle hanging around your neck. So if Vision Pro is not iPhone, then $269 versus $3,500, even $1,000 Apple Vision Pro is not worth it compared to $300. No way. People watch porn with that shit. Yeah, Vitaly told me he does. So I guess I haven't tried it from that perspective. But I was playing chess. I was playing ping pong with Vitaly. I'm like, I'm literally hitting a ping pong and I'm holding like a controller. I'm not holding a real ping. It was insane, bro. Like there was barely any lag. There was no latency. It was just a phenomenal product. It was beautiful. And so it made me very bullish. Now, I don't know if Meta scales it as much as, an Apple. That's down to sales and marketing. But when you use the product, if they can just get people to use the damn thing, it changes your mind. It changes everything. Okay, hold on. These things are downloading. The videos are downloaded, so I can show you these things. The videos, are they downloaded yet? Are they downloaded? Are they downloaded? Yep. Wait, no, they're not. No, they are. Okay, here we go. This is exclusives. This is exclusive. Okay, boom. Here we go. I need to upload this on the Finance Junkie channel. I haven't got a chance to upload this. So let me get rid of this. Let me go here. Let me get rid of all these tabs. All right, here we go. This is the exclusives. Tanner, you're here. You're about to watch me experience a MetaQuest, okay?
Let's do it.
Here we go. Let me know if you guys can't hear the audio. I think you should be able to hear it, though.
Chess experience. You can play people, by the way. You have to figure it out. You have to figure out the interface. And...
I don't think they're getting audio.
Yeah, this is the problem we had last time when Vitaly tried to share this. Why is there no audio, bro? Every time we try to share tab audio, the window media, that's so weird. Yeah, I'm sorry. I'm gonna have to upload it on YouTube. Look, I'll upload it on YouTube right now. It should upload quickly, and while we're talking, I'll pull it up. That's so weird. I don't know why that doesn't happen. That's weird. All right, Tanner. SoFi, and so guys, I'll upload it and then we'll watch it. SoFi student loans decision. What do you think is gonna happen in the next 20 minutes?
Sorry, I was muted. So I think there's going to be a cancellation, or a stopping of the forgiveness. Supposedly, that's where they're leaning in a
Well,
vote.
what do you mean by
People
that?
are
What do you mean
thinking
by that?
that it's not going to allow to go through.
Okay.
That the $10,000 to $20,000 of student loan forgiveness is seeming like it's not going to go through in a vote of 5-4. Is from what I heard from some
Who's the
more
conservative
experienced
that joins
people.
the liberals? Do you know?
Honestly, I'm not following it that close.
Okay. Yeah, I
I'm
forgot
not
you're from
following
Canada.
it.
You don't know them that well. Yeah.
Yeah, exactly. So, and the truth is, I don't even think it makes that much of a difference. Like,
Can you explain to the audience why, even if it goes through, why do you think it doesn't make a difference for SoFi?
okay, so Brad Freeman put it best, but I'll do my best to add even more context than what he said. So, so essentially, student loans, the Biden administration is trying to cancel anywhere between $10,000 for normal students or $20,000 for Pell Grant recipients. Okay. But there are some stipulations. You need to be making roughly under $125,000 if you're single, or $250,000 if you're in a couple, under that to receive the actual forgiveness. If you're receiving anything more, you don't get it. Okay. So that's very important. Then you also have to look at what's the average client for SoFi to begin with. And the average SoFi client makes around $170,000 whenever it comes to their student loans with high FICO scores. So the people that will actually fall under SoFi's niche that actually gets forgiveness is also quite small. Okay, so there's some things to think about whenever it comes to that. But then, that being said, the total amount after sort of the forgiveness or not. So the average student loans is about $70,000 per person is how much SoFi has been going after. So think about that as the new people that are coming in might have 60,000. Okay. So that being said, that's not a big difference. So the way that Brad Freeman sort of brought it down was, okay, the moratorium ending is the most important part. That's the 85% of what SoFi wanted. This extra amount that's coming out today within the next couple minutes will be that extra 15% cherry on top for one product for SoFi. Now I just refreshed it. I'm not seeing anything yet.
Yeah, let me pull up NBC. They're talking. Let's get a little bit of their coverage as well. See what they're saying.
Do you want me to send you the link of the actual thing?
Yes, please do that. Yeah.
Okay.
A form of expression, a form of my speech. The majority opinion here says, don't go there. That's not what we're deciding today.
Oh, they're doing more decisions. So there's a web designer, same sex. Supreme Court rules in favor of web designer who won't create same sex wedding sites. What was the decision on that?
So I don't know, my friend.
Let me see that. So that was that's probably on CNN. We'll get that. So they went to religious freedoms, which makes sense with this conservative court. Was that a 6-3? That might be a 6-3 as well. Supreme Court of the United States. So they allowed so this is a wedding designer who doesn't want to make gay couples weddings, I guess. I wish they just gave the decision, but they never pull up the numbers. We got riots going on in France right now. There's a lot of stuff going on across the world. All right, let's see if there's more coverage on the student loan stuff. Yeah, I agree with your point. Ultimately, it's not going to affect SoFi as much, especially because the quality of borrowers we have. It's going to be less likely for I'll get back to it in a second. It's going to be less likely for us to, even if it goes through for those borrowers, because they're the doctors, lawyers, these are people that have hundreds of thousands of dollars. So 10, 20K is not going to either affect them because they're making too much money in their salary, or if it does help them, they still have a lot to refinance.
Yeah, and like look at SoFi right now. It's already having a great day. I think people are expecting good news. There was one thing I want to bring it up because I don't know the exact quote and I don't want to paraphrase it.
Okay, I'm going to be looking for this thing.
It was, I forget which person it was, but they were talking about how, and I guess he was the deciding factor between the 4-4. And he said the best sort of decisions that they make is whenever they kind of question the administration. Paraphrasing heavily. So that's kind of giving a lot of people this feeling that they are going to cancel it, considering it's sort of pushing back at this all-ruling Biden administration that's sort of setting a lot of strong things like this forgiveness, which is quite a hefty bill for the taxpayer to pay.
Right.
Story is, we'll take you there. You're streaming ABC.
Great unfolding.
The worries on
How would your mom
is using that cash to make other.
Yeah, none of them are covering it exactly yet. So I guess we got to be the coverage, bro. These fucking big media companies aren't giving the right coverage, so we got to cover it. Okay, so let's ask this question: how much in Q3, when this would be going into effect, do you think SoFi can make off of this? I've heard it adds 40 million, 80 million to top line revenue. Any thoughts on what this would do?
Not 40 million, 80 million to top line revenue. It adds or at least I think the numbers that everyone's going off is Chris Hager's number, but he said 40 to 80 million of adjusted EBITDA, right? So this could be massive. So it's a big deal. The funny thing is that what a lot of people were talking about on Twitter was like, okay, SoFi is already holding too many of these loans. They can't go out and start originating, a new $2 billion each quarter. Absolutely they can. Absolutely.
Well, what's the reason why they can't? What's the reason they can't?
Well, people are thinking that they'll be overcapitalized and that they're holding on to too many loans, and that really we're only allowed to hold around $20 billion of loans currently, and then that's assuming that you also have a cap on our actual what is it? I was about to say management expense ratios. No, our leverage ratios. Sorry. So a bank has to keep a certain amount of cash as a leverage to say, okay, well, if a bunch of people default or if a bunch of people need their money, that you have this safety net, right? That for SoFi is about 6.5% to 7%. So we are absolutely way overcapitalized. I think we're at 13.5% right now, but still, that's not where we were a couple of quarters ago at like 17%. That being said, if we were to just go out and originate $2 billion plus of student loans, originating meaning that's the total number of dollars that we're actually going and giving out for, interest rate or interest fees and everything like this to be paid over time, but we don't have to keep those on our books. See, the biggest misconception whenever it comes to banking is that they are just like taking your mortgage, putting it on the books, and then slowly accepting your payments over the course of the next 30 years. It's not true. In fact, they get rid of you very quickly. So SoFi can take those loans and then instantly turn around and go, anyone want this? It's going to pay me out, 7% over the course of the next, 7% per year, but it's going to pay me X amount of dollars over the next couple of years. How about instead of waiting all that long, let's just accept 4% on our money instead of 7%. And that's essentially what's happening. So SoFi will be able to just sell all their loans. And let's say that, for example, this $2 billion of new student loan originations doesn't like there's no buyers for that 4% premium, right? Because that's the other big bear case, is that there will be no buyers. Okay, sell it at 1%. It's still profit where we didn't have before. And there's no cost to selling these loans other than, if someone were to sell it or try to buy these loans for less than what we actually originated them for. And at the current default rates and the high premium or the high style of client with high FICO scores and 170,000 plus income, no one is giving us less than what we actually paid for these clients. Not a chance.
Why do people choose to go with a SoFi? Like my $10,250 in student loans, I believe, are federal. You would argue a federal government would give you a way better interest rate than a private company. So why do people even choose private student loan refinancing?
Sorry, say that one more time. Who would give you a better rate?
I'm assuming that SoFi would charge more than the federal funds rates when it comes to private student loan refinancing. So why wouldn't I just go with a government loan versus a private loan?
So they don't. Essentially, what's happening is that the federal student loan program is designed for equality. Okay.
Right.
They take all of the extremely high defaulting people, low FICO score people, great people, super high FICO score people, high income, and batch them all together and find a rate that would actually be suitable for all candidates. So if you're part of the federal student loan program, you pay the same rate as 100% of your peers.
Really?
But if you're above average, yeah, correct.
Wow.
So if you're above average, you do not fit under that. You might be actually getting pulled down by your peers because you might be above average. So SoFi has to go after the super high income people because they're getting a better rate than the rest of their peers. Okay. So it's not that they actually would get a better rate. There's a lot of people that do benefit that might be under average that can, potentially get brought up by those people that are doing better. But that's why SoFi wants to take out those high quality people and say, hey, you don't need equality. You want premium service.
Yeah. So if I can go ahead.
Yeah, no, exactly too. There's another way to refinance. There's two real ways to refinance. There's either you get a better rate for the same term or you extend your term and you can even pay a higher interest rate, but at least your payments monthly will be, less over time.
Tanner is spitting as per usual. Game 7, Tanner. Does SoFi tempt them with other products? Yeah, I'd imagine if you're at that income level, then they can upsell you correctly, right?
You want to know a statistic that Anthony Noto said?
Go ahead.
He said that during COVID, for the private student loan market, SoFi, this tiny little company, actually held 60% of the overall market share.
Wow.
60%. So
that's why we're bullish on student loans coming back.
Yeah, because and now I'm a big believer we'll lose a lot of that market share because there was a lot of companies that just simply weren't advertising when SoFi still was.
Yeah.
But there will be a lot of people who are still in school or do talk to their friends that go, no, SoFi is the place to be. They helped me out during this time. Oh, I just hit my plug. I'll come back on in a second.
Yeah, you're good.
No, that's the wrong camera.
While you're doing that,
the decision for the Supreme Court case with the web designer and LGBTQ marriage was 6-3. Thomas Alito, Kavanaugh, Barrett, and Roberts and Gorsuch were the majority, and Sonia Sotomayor, Kagan, and Jackson were the minority. So 6-3 liberals versus conservatives on the wedding decision.
Did you hit something with your mic? Because you sound like you're coming from a different source now.
Okay, that should be better now. I meant to do that.
Yeah, that sounds great. But yeah, I'm still not seeing anything come out. It should be out in the next minute. Like they said 10:30. So
let me share the screen on the thing. Yeah, let's see, man. This is a big deal. This is a very, very big deal. We're gonna keep refreshing it. And what is it called, Tanner? What's the name of the thing? Do you know the name of the case? Like XYZ versus XYZ.
Yeah, I know what you're saying. I could find it here in a second.
It's gonna be really interesting. Yeah, wrong mic. I meant to plug in the webcam, and I guess I switched the mic. Sorry about that, guys. Someone explained what the church thing was about. I don't know if you're talking about the wedding thing, but basically it was a designer who didn't want to do a wedding design for a gay couple, and so
that was a long time ago.
Yeah, these are all from 2022. So these are all cases that happened. The Supreme Court usually does them a year later after they hear arguments for like 6 months.
That was in 2022?
Yeah, look, the term year 2022.
Wow.
All of these are, I believe, are from 2022. Or maybe early 2023. I don't know why it says 2022, but a lot of them. Or I think it means 2022 to 2023 decisions versus 2023 to 2024.
Okay, here we go. Let me see what.
I don't agree with the business decision, but I agree with them having the right to. Yeah, the business gets weird because if you say a business can't serve a certain group of people on religious freedoms, then that's kind of violating civil rights and a lot of the things that allow non-discrimination for businesses. But it's hard to weigh that against religious freedoms, right? Because if you have a little tiny wedding cake business and you don't believe in gay marriage, should you be forced to do that even though you're a business? I don't know. The Supreme Court says you don't have to, so they made the decision for us.
Yeah, what I'm worried about here, just off of that for a second, is that if it's not coming out between the times that they said, between 10 and 10:30, I mean, who knows when this is going to come out? That's what I'm worried about now.
Well, I think it's going to happen because if NBC is live streaming it, they're not going to be live streaming for 6 hours waiting for this shit, right? They have money to make. So I would imagine that it's coming out soon. Let's refresh on them. Okay, just got demonetized there. That's great.
I just brought a coffee in live time.
One of the parties engaged in a strategic move to leave out the party that did have standing, Mohila, and bring it on behalf of the states who arguably did not have standing. Look for the justices to possibly surprise us here, and possibly you may see a ruling for the Biden administration by this conservative majority on the issue of standing, which technically doesn't reach the merits.
Yeah, that's the Missouri Higher Education Loans, the loan servicer in one of the states that sued. But as you're pointing out, it's the states that sued and not the loan servicer. And so it gets kind of technical there, but that's one of the issues of standing that the court will grapple with. On the larger issues, I want to go back to Kelly O'Donnell at the White House because, you can't talk about this in a vacuum. It obviously happens in a political context. We saw that Democrats felt that their fortunes at the ballot box were quite enhanced by the Dobbs decision. And now we have the affirmative action decision, but public views on affirmative action are quite different. How is the White House handling some of these decisions, and what is the strategy there?
Well, certainly all of these things have political implications for the Biden White House as we are looking at a campaign year, and believing in policies is one part of what the administration stands for, but then they have to put it in the calculus of how is this playing politically. And when we look at things like the student loan case and what the outcome will be today, the administration has said they believe they are on the right side.
All right, we should get coverage immediately then. Well, let me see. Share this tab. Here it is.
Yeah. Department of Education versus Brown.
Oh, here it is. All right, here we go. Going live. Hey, you got to go to the next couple of pages at the bottom to see it. Here we go. It'll be here on the 5th page. It'll be right down here. This is live, ladies and gentlemen. Look at SoFi stock as this is coming out. This is live. Usually it's on the bottom. Maybe it's at the top. This is live.
I'm just reading through it.
I wish they put the numbers at the top. They make it so complicated to see. The court granted. Let me type the name. Yeah, Alito. I should get the name. Alito delivered the opinion for a unanimous court.
Whoa.
Wait, so this was unanimous?
I think that means that
it didn't go through or it went through.
Well, we'll keep reading, but I think that means it.
Oh, let's see. The plan discharges 10,000, 20,000 eligible secretary before the plan took effect. They're doing all the background because they got to do the history first before they get into the case. Begins and ends with standing. Significantly, respondents are not claiming. Well, it's true that the court's procedures. I still don't know. So it's a unanimous decision, which is interesting. Let's see what they all decided. They agree with the department. They argue that they are. Ultimately, however, we do not resolve respondents' procedural claim because holy shit, it went through. Holy crap, it went through. Ultimately, however, we do not resolve respondents' procedural claim because we conclude that they lack the standing to bring it. Oh, you're not even seeing what I'm reading. Holy crap, my bad. Oh, my bad. I thought you guys were looking at what I'm looking at. There it is. And this was one of the technicalities that was argued. One of the technicalities was they don't have the right, or they didn't do it the right way in terms of bringing up the lawsuit. Accordingly, we vacate the judgment of the district court and we remand with instructions to dismiss. We simultaneously deny as moot the department's application for a stay pending appeal.
Yeah, wait. I don't know if this is. I think
Either
they're
I'm
dropping
wrong,
the
either
case.
I'm wrong or I'm right.
Yeah, I think they're dropping the case that because it's the Department of Education is not the one that's sued. So if they're dropping the case, that means that Biden's administration stands.
So yeah, that's correct. And SoFi's halted right now. SoFi's halted. Wow. SoFi. Well, it didn't really tank that. 856 is not a tank, but it's halted. Wow. Yeah. SoFi got halted. Yo, I don't have to pay $10,000.
This is a win for you, regardless, eh?
$10,000 is that? Oh man. Wait, 2 different cases. Is there another case? Are we fucking this whole coverage up? What's going on?
No, I don't think so.
No, I think this is true. I think. All right, let's go to the guys smarter than us on NBC. Let's see what they're doing. All right, so it looks like when it's unanimous, that's when I had a feeling that this was going to go in Biden's way. Here we go.
Of the law to provide this relief.
Oh my God, it is 2 different cases.
Understand?
Wait, it is
Biden versus Nebraska. Yeah.
Okay, so all right, let's hear what they're saying.
Both of these issues, under both of these arguments, these are people who actually wanted to get their loans forgiven. And so what the court is dismissing them for not having standing is because if they got their way, nobody would get any forgiveness, right? If the actual injunction that has blocked this plan was actually to stay into place, since nobody would be covered, that's why they're dismissing it, because you have to be able to have the harm that you're saying in court. You have to be able to have it redressed in some way. And so if nobody would get any coverage, then obviously that would defeat the whole purpose, since they want to get covered. So that's why it's interesting that they did this one first.
Well, we have the second case now, Laura. Okay. I'm actually going to let you step out here and read it really quickly. I will say that first
might be the actual decision.
Case was a unanimous decision by the court. It does say that Missouri, the state of Missouri, does have standing to challenge the program.
6-3, no loan forgiveness. It's final.
I'm here, and we'll continue to read it here for a second. Let me turn to Danny Savallo. So on that first case, I think Laura explained it pretty well. That was the easier case to dismiss. Now we got to read the second case, which is the set of states that are suing to stop this debt relief program. We have to see if they have standing, and if they do have standing, whether or not the court finds that the Biden administration had the authority to have this debt relief program.
And it appears those 2 questions are answered. And the state of Missouri, the court appears to have concluded, does have standing, even though the argument was made at oral argument that the real harm was through Mohila, that student loan servicer. The court has decided that the state of Missouri does have standing, but it appears to have also decided on the second issue, whether the text of the HEROES Act authorizes the secretary's loan forgiveness program, and it appears to conclude that the text of the act, the federal law, does not authorize the loan forgiveness program.
That is correct. So here we go. We got this right here. Roberts, Thomas, Alito, Gorsuch, Kavanaugh, and Barrett. 1, 2, 3, 4, 5, 6. So we had the 6 conservatives say no, and then the other 3 liberals said yes.
In other words, this came down to really 2 words, to modify or, the power of the secretary to modify does not permit the basic and fundamental changes to the scheme designed by Congress. So in other words, when the Biden administration attempted to modify as it was given power to, it did not have the power to do what it sought to do. In essence, this was too much. This was more than a modification.
I want to turn to Laura, if you're ready to talk to me about this, Laura, because it certainly, in reading it, seems like the court may be striking down the student debt relief program with regard to this case that this.
Okay, real quick on the stock, guys. If you guys look at your Robinhood, my stock basically disappeared. All the money I had in SoFi is gone. If there's a glitch right now, it like literally, it's like I have like a lot of money in SoFi. It's just gone. It went right back up. It's at 890, so it's not halting. Now it's at 916. Now it's at 918. Now it's at 915. So it's mooning. Let me go to the stock real quick.
It's definitely.
If anyone got
the definitely positive.
Yeah, if anyone got the dip on that halt, which it might have been hard to, you're up. Yeah, so this is great for SoFi. This is absolutely phenomenal for SoFi. So SoFi is up right now, $9.22. We're up 5%.
I think a lot of people got baited on the idea that that Brown case, because
because no one was talking about the Brown case at all, right? We just forgot about it. Look, it's up 7%. We're at 930s. There we go. SoFi, it's up.
This is just the bonus on top. This is the extra 15%. This is not a make or break, but it does just help, right? If for example, people like Amit that can't get rid of their $10,000 in student loans, has to pay all that back, then people like Amit are going to need to look for other options to still pay that off. That is an extra client potentially.
I'm using SoFi to fucking pay for these gains, to use these gains to pay off that damn 10,000. So SoFi is paying for it one way or another. Look at that. It's pretty volatile. Only up 4%. It was just at the 930s. So we'll see where it goes. But I mean, yeah, it was halted off some. This is how crazy the market moves are, right? Some random decision that you would think the market knows has no impact on SoFi, really, because it's not the real decision, tanks the stock, halts the company, and then the real decision comes out, and then boom, SoFi's there. Okay, so so Tanner, what do you think this? I mean, I know you've already said it, but overall, why is this good for SoFi?
Yeah, so I mean, I think it's just another reason why people might refinance, because the actual monthly bills for 70 grand or something like this for the average person is a lot to pay. This could be potentially an extra $700-800 in monthly payments just for student loans. And now that doesn't sound great, but then whenever you have the option to actually extend that, go 20 years, for example, drop that payment down to $500 a month, and you don't have that option through, federal means, that you might want to look to take that bill, private. So it was a very good time and a very good reason for a lot of people that might have been wanting to go to SoFi for a while. But people have to remember, there's a difference between private loans and federal student loans. If you had a private loan with SoFi, this $10,000 was not even for you. This was only if the loans were held federally. Okay. So it's important to know that there might have been a lot of people, I'm going to use Amit, for example, that might have wanted to switch to SoFi, but has held out for these many years, not just because of the moratorium, but also because that $10,000 could have been erased. That's now, Amit, now that's not going to happen.
Yep.
And you should look to bring that, loan private. You might not make enough for SoFi to accept you, but hey, put in an application.
That's fair. Let's get a little bit more coverage, and then me and Tanner will keep talking.
States brought it. I'm just reading it myself, but it says this is always the court to conclude that a mass debt cancellation program is one that Congress would likely have intended to do itself. And in such circumstances, the court has required the agencies to point to clear congressional authorization. This goes to the issue of, look, if you're going to do something huge like this, the court says it's Congress under our Constitution that's supposed to do it, not some federal agency. And that seems to be what the case hinges on here.
The upshot is that this plan is not moving forward for the Biden administration. All it takes is one person, one entity, one state to have standing, which in this case, it's decided that it does. And so then it reached the merits. And on the merits, you're right, Savannah, the court is saying they did not have clear congressional authorization for this. They looked at the statute and they said, it's not going to work for you here. Now, that doesn't mean, we should be clear, that the Biden administration couldn't go through a different regulatory process. It had always had that option, but it didn't take that route. Instead, it went through a different process in order to make this plan go through faster. And I think it's worth noting that that this is not to say that you can't have your student loans forgiven forever. If the Biden administration decided to go through that much more arduous process, it could do so. But that does seem unlikely at this point. And we should also mention that this plan was about a one-time forgiveness, a lump sum to lop off your bill. It's not about the payments that have been on pause largely since the beginning of the pandemic. In March of 2020, remember, under the Trump administration, all federal loan payments were put on pause. And the idea there was to give some people a little bit of breathing room during COVID to help make sure that you weren't in an economically tough position. Those payments, regardless of what had happened here today, are set to resume this fall. And so it was really two pieces here. The plan that the court.
All right.
Okay. So I wanted to add to that a little bit. The amount, although like whenever I'm talking about the 70,000, that saying taking 10,000 off of that is small. Whenever you're actually talking about the average taxpayer, you actual Americans, right? There's a $1.7 trillion student loan problem. Okay. Now, I just want to make sure everyone's aware. This is not SoFi's like they didn't create that. This is a problem with the actual education system. Take it up with them. But you have to understand that in the 1.7 trillion, this was going to be like a $400+ billion forgiveness plan. That is what are you doing?
I was trying to get the right. Go ahead, keep talking. Just do the analysis. Keep doing your thing.
Yeah. So, you know, a $400 billion forgiveness out of $1.7 trillion worth of the total, you know, student loans is a massive bill to pay. And then whenever you consider that there was a lot of people like, what was her name? Tina Turner or whatever, that was saying, wipe away $50,000 per student, wipe away it all. Student loans be gone. You know, the only people that were ever pressing for that were people that had student loans, right? Give me the advantage. I mean, you guys knew the loan whenever you took it out. You don't have to go to post-secondary if you don't want to. You get a nice job. You can be a YouTube creator like me in a minute. Okay.
Tanner's like, pull yourself up by the bootstraps, stop fucking complaining, and pay off the fucking.
Yeah, well, you took out the loan, dude. You took out the loan.
Yo, I look, a couple years ago, I would say, Tanner, you're the meanest person in the world, and you know, life has changed. And I ideologically, I'm just like, man, it is kind of unfair, bro. Like, it is kind of unfair for people who took. Now, granted, if you took out a loan to study art history or some shit, and I'm working my ass off as a plumber, and now I'm paying off your art history loan because you did fucking nothing with that degree because, you know, you just didn't have the common sense to realize it's not a marketable, valuable degree, and you're partying all day in college. It's a good argument. And I know there's a counter argument. I'm very sympathetic to the counter argument because I have 10 grand in student loans. I understand, but it's just, it's hard to imagine that would be super fair, especially in this court. You know, we had a couple different judges. We could have a totally different argument. So CNN says Biden plans to announce new action on student loans. Raw thoughts, Tanner. What do you think he could do?
I'm not sure what he can do. There was a couple things that they were pushing around. They're also doing this, you know, grace period for people. So even in the first 90 days that they come back, they don't have to repay it. It's all a bunch of crap. So they still have to, you know, pay interest on their loans. They just won't be able to default in the first 90 days, saying, you know, people have to get used to the idea that student loans are coming back. You guys had 3 years to prepare. Okay. But I mean, we know where everyone spent their money. Aritzia stock is up, and that's, you know, good life decisions.
Yeah. And like, look, I think the other thing, the Olin guys did a really good take on this one, the decision when Biden tried to do this through executive order, which, by the way, I don't know how Biden can do anything if he's either going to keep delaying the payments, which I don't think is possible because the Department of Education said it's not, or use executive order, but he just used executive order unless he does a different type of executive order. The Olin podcast, Chamath made a really good argument about how this only further incentivizes these universities to continuously raise the prices at absurd levels because they know the government will bail them out with giving people $60,000 to study something that's not a profitable degree.
That's what needs to change.
Yeah. And so, like, obviously I agree. It would be nice to get the 10,000 forgiveness, but if my kids are paying $100 grand a year for college in 2045, that means the system's broken. Like, it's not sustainable for that to be able to happen. And so something's got to change there.
Yeah. I think that if you can go online and get certificates from high-rated technology companies that do actually bode well on your resume, and you can get a lot of your knowledge from free sources, even places like, you know, Harvard Education Online, all of their stuff is all posted publicly.
And then on LinkedIn, you can say I'm a Harvard graduate.
Yeah, so that's not the way that you want to do that. But if the bill gets too high, there is going to be a higher percentage of students that are going to look for alternative means of education. And so there'll have to be some stop to this unlimited increase in student loan payments. These colleges are just becoming hedge funds. They're just large endowment funds that the interest that they could make on it could fund every single student that ends up going to that school. But it's just this insane, weird system that's set up to just benefit the rich. And like you said, I would not want to be a plumber that works way harder than anyone else to go out and fund the likes of the next interns for JP Morgan. Okay.
100%. Yeah, man. It's look, and you got the raise, the counter argument. It hurts us nothing to help others. Life is unfair to everyone. God forbid you to help someone. I think there's a point there, especially with PPP loans, right? And a lot of people took advantage of that. We bailed out the airlines during the pandemic. Why don't we give some relief to the kids? I guess the counter argument to that is we gave relief for 3 years. Second of all, we can't afford to print $400 billion given where inflation's at right now. And it would hurt the middle class if inflation increases. So even though you save 10,000, if you lose purchasing power, it might be a moot point at that.
There's a comment I want to address because this JRY says it's a capitalist system. No, it's not. Whenever you're guaranteeing payments based on no sort of defaults or anything, that's like socialism. There's no capitalists about, full guarantees. There's nothing about capitalism there. So if it really was capitalist, then colleges would have to make their decisions to who to enroll based on whatever sort of scholarship means, or the ability to pay back, or even pricing better to beat out other colleges. That's capitalism, not the ability to get guarantees based on government. That's not true.
If it was a free market, colleges would not cost 30, 40 grand a year because there would be a cheaper alternative with the same or relatively better education. But governments giving colleges the ability to give out, or governments giving loans directly to kids, that's what allows colleges to keep it at that high level. So yeah, you're right.
Yeah. And then so you kind of push it onto the student saying, yeah, but you guys can make the decision on whether you want to take $160,000 worth of student loans. But it's like, you're making that decision whenever you're 18 years old and you don't understand how long and how not guaranteed the career line that you're going to get into from, like, I don't know. It's a crazy system. It's nothing like the inflation of educational costs has way outdone the actual inflation of real US dollars. And then let alone the income that you could make from those jobs has not scaled nearly as fast. So it's literally a worse investment than it ever has been.
Tanner, I'm putting your Twitter in the chat. Everyone, please make sure to go follow Tanner for him blessing us with his analysis on SoFi and student loans. Tanner, can you tell people about your college or lack of college experience?
Yeah, lack of college. I never went. I'm super anti post-secondary.
Why?
I've had because it costs too much. It's a terrible system. I've been in 2 careers now that have mandated a university degree, and I've never had one. So I'm a financial security advisor. I never went to college or university. I studied my ass off. I passed all my exams, and then I got my licenses sponsored by the financial institutions that hire me today. So you don't need to go. I was up a ton of money because I was the youngest person that started in my financial, institution at 21 years old. And I've made all that money while people are still paying it back. So I'm like, my girlfriend hates it because she's been to college like for
she has loans
too
a lot.
Yeah. I mean, I think she's paid them off now, but she's gone to like 2 or 3 different times because she's had changes in her, decision of what she wants to be. But that doesn't make the loans go away. Yeah. So you still have to pay that back. And so for me, like, I've just always been super anti post-secondary, not because of continued education. I love that. But there's too many free options today. And you can spike a resume based on other things other than just having this little check mark that says the same other thing that you could do based on a Google certificate or something like this that's free. So I'm just not a believer.
Your story is very inspiring to me. I relate to it to an extent because I went to college, and for people probably know, I was a debater in high school. I developed a good reputation, started a consulting firm, and my junior year, I got a really big client, like a client that was paying a lot of money. So while I was in college, I was working about 30 hours a week with that client, and that was helping me pay off college. I paid her about $40,000 in terms of the actual education, and then my housing, my books. Like I didn't borrow a single dollar from my parents after sophomore year, just because I developed a decent business that was helping pay off college. And I was at the job one day. It was like a Tuesday in my senior year, and the guy, the head of the company who contracted me, he was like, "Bro, why the fuck are you in college?" He was like, "You can work full time with us and make a shit ton of money." And I was like, yeah, but I got to finish the degree. He was like, "I don't care if you have a degree. You are bringing us clients. You are generating us value. Why are you worried about this degree? I will pay you more money if you can do more hours for us." And then, I had to tell him I got to still finish the degree. But it goes to show that if you can get the job done, no one gives a fuck about your degree. If you can code, no one cares if you have a CS degree. Can you code?
after one or two, you know, different jobs that you've had, they're just looking at your job history, not at your education, right? And for me, I'll always be in sales. I love sales. I think there's two ways to become a millionaire in this world, and it's an entrepreneur or it's a salesman. Um, and it's true though, because like your income is uncapped depending on where you are.
So
And
what skills do you think, if you have to name like 3 to 5 skills that people could learn if they don't want to go to college, what are those skills that they can learn on their own, and how do they learn those skills on their own? How did you learn the sales and all the shit you're doing to be able to make money without college?
Well, I just like, so I'm a big believer that YouTube and podcasts and stuff has put me in rooms with the smartest people that I never would have had access to. So, like, for example, listening to the All In podcast every single or every week is like, when do I ever get to talk to David Sachs? But I get to listen to how he thinks.
Yeah.
So I don't remember what I was listening to back in like 2016, 2017, but I remember it was telling me to freaking start reading some books, start getting into some things that just give you basic communication skills. And I do think that sales is all just communication, understanding body language. So I don't know the exact, 3 to 5 rules. I haven't quite thought about it like that. But
so communication to you is number one.
Yeah, 100%. 100%. And then it's just like, for example, it's even forced in our industry that you need what's called CE credits, continued education credits, and just knowing the newest product. You don't want to be the doctor that is, still falling behind and not getting with the newest trends, right? So part of the sales game, at least for me, is knowing like always what's sort of in season.
I think it's also, you have to have a little bit of the entrepreneurial spirit, right? Because I know when I was in college, I started many businesses. All of them failed, but you start so many, you get to the point where like you're just used to failing and you're used to learning these new skills. I did Shopify stores, Facebook, dropshipping, all this stuff. And so you learn a little bit of just like, this is what it takes to take something and build it up. And like, yeah, it might fail, but like on the next thing, this is the mistakes I'm not going to make. Were you entrepreneurial at 15, 16, 17 as well? Did you start stuff and fail at stuff as well?
Yeah, I've got a bunch of failed companies. Same thing, right? Like Shopify stores, drop shipping, everything. Because I just had that itch that I wanted more. And I mean that sounds crazy, but that is like the American dream, right? So, but like in society now, you're supposed to feel bad for wanting more. But yeah, I'm just continuously trying to better myself. And like, I hated growing up, like reading any books and stuff like this. And then you look at all these people that are doing extremely well and they're going, no, I read this book. And I was like, all right, well, I'll sit down and force myself to do that. Yeah. I think it's the same reason why people are so health conscious right now, why people are so focused on fitness and all these things, is that you see the people that are doing better and you go, okay, well, I got to do that then, so I don't know. I don't think it's down to an exact science. Just try your hardest. And like what you say, Amit, like I always look at you and then you go like, okay, well, you know what? Like today I have an opportunity to put in an extra hour. I'm going to do that extra hour, because if it's me versus you and you're not doing that, then I get ahead.
Yeah. SoFi now selling off on the news. I think this is a decent dip. I mean, we could see it go lower than this, but like people are selling off the news, which is fine. The point is, the right news happened for this stock, which it would be inconsequential regardless, but I think the market would have perceived it as even worse if it did go through. So, SoFi is going to benefit from this. And yeah, I agree. Like putting in that extra hour is so important. I've been trying to continuously tell myself that every day. Like, what can you control, right? When it came to YouTube, like you can only control the amount of output you put out. You can't control the algorithm. You may think you made the world's greatest video and it just doesn't get clicked. I did an interview with Meet Kevin. It got 1,000 views. This is Meet Kevin. How is it not getting views? I was like, what? It's like, well, post the next video, right? Keep it going. And so you just keep going. You just keep trying. And I think there's an entrepreneurial spirit that comes with trying more shit and not being so wedded. Like all my friends were obsessed with like, I need to go to JP Morgan Chase or Amazon or Bank of America or Goldman Sachs. And I'm like, y'all are some fucking losers, bro. Y'all are putting this pedestal to this company that will give zero shits about you if you die the next day, because you think the brand association with them makes you worthwhile in life. Meanwhile, while I'm on FaceTime with you, you're crying because even though you're making 6 figures, you don't care about what you're doing. You don't know anything about what you're doing. You didn't actually build anything on your own. You took this stupid degree from college and you're, now being disrespected by managers and bosses who want to shit on you. Like going to college and then getting some job at some Fortune 500 is not the life people think they claim it to be. And there's just alternative aspects to it.
I think like those people that are like interning at JP Morgan and stuff, you're still working 12 to 14-hour days. It's not any easier than if you were to just try it out for yourself and you get to keep all the profits. I think, like, for example, the same reason why I'm on YouTube now, it's like it's never been like a better time to sort of like, there's just so many tools now. Like I always talk back like there's a family member that I have that was extremely rich. And I just think about like, how did you even do that without any of the tools? Like half the information that you were getting was just relayed word of mouth rather than like a CRM or something. It's crazy. We're so spoiled now. And still people are like, no, I just want to sit at home.
Yeah, I think, by the way, Tanner's YouTube is in the chat. If you are here and not subscribed to Tanner, 345 people, please, please, please subscribe to Tanner's YouTube. He would really appreciate it. We would all appreciate it. We're all trying to grow. So please check him out if you're into SoFi, FinTech, or any type of stocks. It'll be great to subscribe to him. I think that, there's you and me might be able to have this conversation a little bit more freely, but there is a lot of hesitation to someone who has never done anything on their own. Because if you've never gone through the process of failing, this is what I credit, my parents, they've said, hey, fail and learn it, deal with it, and just keep moving forward. If you've never failed at shit, if you've never tried, if you've never put yourself in an uncomfortable situation, if you've never fucking tried to make, videos getting attention for yourself and did stupid little dances just trying to see, can you get the world to care? If you've never gotten anyone else's attention on an idea that is your own idea of trying to bring something into the world, business, brand, whatever it may be, then of course you're going to bow down to the hegemonic power of corporations because you have no other option because you've never tried to do anything different. And this is why entrepreneurship is so meaningful, even though it's so fucking hard. Because if you do it on your own, whether it's a pizza shop or $1 billion startup, you feel this sense of pride. And my dad worked, my dad's been an entrepreneur for the past 50 years. He owned his own liquor store. He had multiple little businesses in New Jersey. And so I think that's where I got his the work ethic from. But it's a sense of pride, which is that I made this money myself and no one can tell me shit because I did it,
Yeah, no, 100%. I think there's a lot of people get really scared, but I heard this saying one time that I absolutely love is that if you find something scary and it's not actually dangerous, then you have to do it. And that if you have that mindset, then you can take a heck of a lot more risks that aren't actually dangerous. You're just sort of worried about either embarrassment or something like that. And I think that's maybe, some of the biggest pushbacks. There's a conversation between Mark Zuckerberg and Lex Friedman, and these guys are much older than me, but the fact that they're still taking extremely high risks. Same with Elon Musk. Like that just seems to be the way to absolute freedom is just continuous large risks. Didn't
Zuckerberg say you have to get used to being embarrassed?
Yeah, no, I think about, my dad and these sorts of things. Like I try to get him out to the gym or these sorts of things and he doesn't want to, but I think that honestly, it's because he's old now and he doesn't want to be that person that's like, maybe looks a little silly, but the only person that he's going to hurt by not doing it is himself. And at the end of the day, you're not going to become a regular if you don't do that, the first time. So
I made my first 100K selling used cars and I buy and flip on Craigslist. That's amazing. That's awesome.
Yeah, that's awesome. But yeah, go look up the Zuck and Lex podcast episode 2. That was really, really cool. And they talk about, because I saw you talking about the Quest. Yeah. You could buy it for $300 if you want, but get the Quest 3 that comes out in September, man.
That's true. It's coming soon.
It's going to be so good. I'm going to get that. The only problem is, and then this will be the last thing I want to say, but I just hate that they're just pushing it towards video games. I know that video games are like the main thing that you can do in VR, but I wish that they would do some more productivity-based things and stuff like this. I like the idea that you can just like have as many monitors around me. And if I could like work in VR, I absolutely would.
Yeah. No, I agree. And look, I think the thing, and we'll end it off here, but the point of starting a lot of these channels, we're analyzing stocks, but at the end of the day, we're all trying to build some type of financial nest eggs for ourselves to survive and to thrive. And entrepreneurship is a part of that, right? It's like, it's this mindset of, I'm going to go, like even investing, I'm investing in a speculative fintech bank that's going up against JP Morgan. It's like, you could do all the due diligence around it, but it's still kind of risky. And it's, I think the same mindset with Zuckerberg talking about embarrass yourself. You're never too old to put yourself in such an uncomfortable situation. And doing YouTube is one of, the most uncomfortable things. And try to see,
especially live streams, because there's no editing this.
You want to talk about your journey over the past 3 weeks, basically starting to go live every day and what that's, taught you?
Yeah, it was the hardest part. So I started going live every day. Thank you. People can go check it out. It's only about fintech and e-commerce, though. However, it's not. I'm not covering everything. But that being said, the hardest part was the people who get to analyze everything that I'm saying and then go back on Twitter and go, "This was wrong. This was wrong. This was wrong." You know what I mean? And it's like, yeah, because you got to sit with it and analyze it and look through and go back to the earnings and review the numbers. And that was the hardest thing for me. Now I just realize, like, I hope people understand that this is a live stream. Like going through the, Department of Education versus Brown. It's like, we're just doing it live,
I fucked up already today.
Yeah. So, but I've gotten a lot better at that. And I'm sure you're just 100% used to that. It's just like, oh, eat it, move on. But yeah, I just think consistency is super good for me. And I'm just going to keep doing the lives and, because it's a way to get out there and I'm already doing like,
and you just passed 10K subs,
too.
right?
Yep. Thank you.
Like, and when that goes to 20, 30, I mean, people don't realize when you have 20,000 people that press the button, even if they don't watch all your videos, they know who you are. That's only because you made yourself so uncomfortable to be embarrassed and put yourself out there. And then, like when Meet Kevin makes like $125,000 a month and people are like, oh, they get jealous. And I'm like, bro, the guy works his ass off, right? Like he deserves it. And I think this mentality of like, you deserve what you work for because you make yourself uncomfortable. It's an important mindset to have.
Yeah, no, 100%. And I think that, if you're going to sit around and do all this due diligence on all these stocks that you're buying anyways, I'm like, might as well, sort of go live and leverage that because I'm still going to be doing all that due diligence for my own stock portfolio. Might as well do it in front of an audience and then share my opinions on it. So, yeah, it's an amazing thing that I've done with my life. It's probably the most exciting thing has been this YouTube journey, even though it hasn't like taken off. It's been slow. There's nothing magical about what we've been doing, but it's consistent. And I think that's good for my psyche for sure. I mean, I've been doing this for like over 2+ years now.
Yeah.
Just talking about stocks and hey, that was during a bear market. Imagine how much fun it's going to be whenever these positions actually make money.
Yeah, it's going to be fun. It's going to be fun. SoFi down $8.38. Obviously, the news has been sold off. So, granted, it's up from $4.70 a month ago, right? So the news was kind of baked in. We got to all remember that same thing with Palantir, goes from 16 to 14. Well, it's up from $7. So I think that's important to keep in mind. Overall, good news for SoFi. We'll see how it plays out over the next couple quarters when that revenue starts coming in, which is really the only thing that matters, adjusted EBITDA from student loans. And then we'll keep playing.
Yeah, this is the cherry on top. This was not a make it or break it. I wanted everyone to know that this is just that little extra tip top of the student loan, coming back. The moratorium was much more important. And that's why we're up practically, near 100% in the last month.
All right, that's it for us. Thank you all for joining. Tanner's YouTube, I'll plug it one more time. Please make sure to subscribe to him.
It's been plugged like 100 times. It's all good. Thank you so much.
I'll do it one more. You guys definitely got to subscribe to Tanner. Thank you for being here, man. Thank you for analyzing the SoFi stuff. And I'll see you tonight on SoFi Weekly. I forgot, so we'll talk then.
Oh, wow. Okay.
We got more work to do. Bye. Bye, everybody.
Bye, guys.